the more you can get closer to that, the more likely you are to get a deal done.
Yeah, there's the odd guys out there that are just like out for blood.
And it's harder to do those kind of deals. Those sellers are going to just sit and wait for a while then.
Right. What's your exit? What's your in? What's your cash?
You got to figure out how much it's all going to cost, and then you work back to arrive at what you're going to pay.
And there you go.
Well, I heard that there is a list. There's a special designation.
And they're going to personally guarantee the return of X and the return of the initial investment.
And that's
if you
huge.
hit your targets.
Can you imagine? Yeah. Welcome back to REI Hot Seat. Andrew Hines here with Jacob Campagnaro.
Hello.
And we're going to be talking about that kind of stuff that you can't really talk about, those deals that you got going on. Jake works with a lot of buyers and sellers. He sees, ear to the ground. He knows what's trading right now. And so I wanted to make this episode about just kind of talking. What are buyers doing right now? What are sellers doing right now? What's making them happy? What's not making them happy? And what's causing deals to get done? So that's today's episode. Jake, thanks for doing this as always.
Yeah. Thanks, Andrew. Teamwork.
Teamwork
makes the deals get done.
Teamwork gets them done. Okay. So let's start obviously the sentiment was over the last year and a half, a lot of fear in the market. And then more recently, say over the last 4 months, interest rates have sort of started making their way down.
Yep.
Probably since October, really.
Yeah. There's with interest rate wise, I know bond rates have come down. So CMHC rates are down. I still think the only way to make sense of a lot of buildings is through CMHC
the MLI
financing,
select thing,
right?
Yeah.
So there's a lot of that conversation still happening, and it's nice that the rates have started to come down. So I've spoken with a number of brokers, and they're saying as low as 4%, 3.8%, 3.7%.
So sub 4 now.
I heard sub 4. Now I don't know if anything's closed sub 4.
Yeah,
but I do know from a few brokers that they're targeting sub 4 for their clients.
So let's dissect this. So for the people who are following, CMHC is a mortgage insurer. They protect the banks, but because they protect the banks are more willing to do more high leverage deals. Yep. And then they also have these special programs for people who get so many points called MLI Select. And if you can get your 100 points, you can get like 50-year amortization and the lowest possible rate.
Up to 50-year am.
Yeah.
The rates don't change too much, but up to 50-year am, up to 95% loan to value.
And that's
if you
huge.
Hit your targets.
Can you imagine? Yeah, if you're only in for 5%. Now, the program changed a little while back, but it's still very much a tool that investors are using.
Oh, it's completely viable. The only big changes was, number one, the application fee went up.
So application fee is now what? It's like 0.5% or something.
Well, there's the application fee, which is $1 per door amount.
Oh, okay.
And then there's the actual cost to set up the mortgage, or the premium. The
premium. Yeah.
And the premiums went up and the fees went up.
Yeah, we've broken this down on a previous episode. I don't recall what they exactly are, but they're not cheap, right? But the big thing is you're adding it to the mortgage. So
the application fee you're not,
but the premiums you are. Yeah.
Anyhow, so those went up, and then the other big change was through the construction financing thing, where you can't take out your financing within a 2-year period. If you're coming from a bridge into CMHC.
Yeah. So if you're not already with one of the nationally approved financial institutions, then they'll make you wait 2 years from when you do go with one.
Yeah.
So if you were with just some private lender or you had a VTB on the deal, now all of a sudden, whenever you do get it refinanced, then you wait 2 years and then you can do it.
And honestly, Andrew, I've tried to get the formula. I've tried to figure out, okay, which mortgages can you do? Which ones can you not? And every lender kind of has a different opinion on it.
Yeah.
And everybody's seeing different things. So I do want to say there's no, yes, there's a hard and fast rule, but no, there's no perfect formula for it. And in some cases, we don't have to wait the 2 years. In some cases, we do. And then there's,
Well, I heard that there is a list. There's a special designation. Adrian Pinoza was just on my my podcast, and he was talking about every deal they're doing through MLI Select.
Yeah.
And he mentioned what it was called. There's a list, but he said Equitable Trust, out of Hamilton, is on that list. There's some B lenders that are on that list.
So, but hold on. There's a difference from what you're talking about, because there's the list of accredited bridge lenders, which CMHC will take out from, essentially, right? So they're not gonna give you a VTB. They're not gonna give you a takeout from the accredited lenders. They are. So if you're with a VTB, what people have had to do is actually go from a VTB to a bridge, and then from the bridge to a CMHC.
So you get exactly.
Right? So there's that, but then there's the 2-year takeout period is a different thing. Those two aren't tied together.
Yeah. So there's a 2-year takeout period that's different. Like you could still do a deal through MLI Select in a short run, right?
Correct.
Like you would just have to buy it and then
you're
go through the application.
Closing with CMHC,
and then
you're not bridging to CMHC.
So you're closing with them, but you need time to do your audit to get the MLI Select program, right?
Right. So what you can do is and it's a process, and I'm not going to sit here and pretend I know how to do it because I pay the professionals to do it for me.
Yeah. You just quarterback.
But there is a process where yes, you can close with CMHC. There's a couple different ways where you can avoid that 2-year wait period. But it's a more complicated process than just this podcast.
Yeah, than what we can get out
and
here.
And the listeners honestly are better off going to a broker to have that conversation.
Yeah,
right?
yeah.
That shouldn't come from me.
Okay, so just to get an idea, like the 2-year wait period, my understanding was like if you do happen to close with like say you closed with RBC but not under CMHC, then you could apply right away and you could go in within the year, assuming everything else was in order. But if it was a new construction or if it was a renovation, that's where
construction financing is what they're making you do the 2-year wait for.
Yeah. So if you had construction financing, construction draws, So and that's whether it's a new construction or a reno, right?
Correct.
Yeah. So what I wanted to get, because this wasn't a CMHC episode, what I wanted to get at is how has that changed things? Like how are people doing things differently from what you can see?
Yeah. So everything in the market right now, and it's funny we were talking about this. I just had a conversation with a realtor yesterday when I was driving, and we had this exact conversation is, how do I price things? Where are things coming in? And it's so crazy because like, at least from what I've seen, I'm not going to speak for anybody else, but like the traditional way of saying, this is the cap rate, this is the dollar per door. It's so you talk to 10 different people, you're going to get 10 different answers right now. Right. One person's going to tell you, no, it has to be an 8 cap or I'm not buying it. And like, and you're like, okay. And then other guys are still buying at 4 1/4. And it's, where's the market value today? And it's super hard to find what that is. And so what we were having this conversation about, and this is where I'm going with it, is what buyers are doing. And like, you really got to just manufacture the deal from scratch, right? And say, okay, what's your exit? What's your in? What's your cash? And how is this going to run at the end of the day?
So are you saying you come up with a game plan before you find a building, or when you find one?
You find it and then you work it backwards, right?
Yeah.
So it's almost like doing the residual land value approach to appraisal.
So you got to figure out how much it's all going to cost, and then you work back to arrive at what you're going to pay.
And there you go. Yeah. And then that might be, that might not be the 6.5 cap. That actually might be a 4 1/4 or a 4.75, right?
In fairness, I think that's always the way real estate should have been done. Any of my renos or whatever, I was always working backwards. What's it going to be worth when I'm done? Of course, I know what I'd like to pay for it today, but I can pay up to X amount.
Yeah, and that's why a lot of realtors try to avoid the guy that calls and says, "Hey, I want an 8 cap or a 6 cap," and they go, "Okay, man, like thanks."
Well, and then you're sort of asking.
It is findable, but
a lot of people who are asking that, they're the turnkey investors. They're the ones that just want to buy, and maybe they're not specifically experienced. Well, it's tough to say.
But and that's the conversation though, Andrew. Like the yes, value add is going to trade at a lower cap, but turnkey quality products not trading at an 8 cap.
No, the turnkey cap goes back down again a bit, doesn't it?
It's a blend, right? Like if it's total crap,
it's somewhere in the middle,
right? If it's if it's the dog's breakfast, you're going to be buying at a lower cap.
Because the rents are low, they have upward mobility.
Yeah, and again, coming back to the appraisal version, like replacement value. At the end of the day, there's a replacement value here, and the building's not going to sell for less. Yeah, or it probably will sell for less than the replacement value, most likely. But there is a bottom, right? It can't just keep going. You can't sell it at $1 per door.
No, of course.
Right. So you're going to look at it that way. And then
like you're saying, like at some point, cap rate's not even a discussion. If you're fully vacant, you're not going to be talking about cap rate. There is no cap rate. Like you could do a hypothetical cap rate.
Or half vacant or a quarter vacant. Like, you know, and then do you count?
It's a very subjective
thing. Do you count, like stabilized rents for the vacancies? Do you count what would a tenant pay for it right now? Anyway, so this is all stuff we can dive into. But where I'm going with it is, what I'm seeing in the market right now is there isn't a cohesive cap rate or dollar per door. What people are looking for is the angle.
So everybody's coming in looking for an angle.
More than ever, what is the angle? And yes, people have always looked for the angle, but now it's not, like you need an angle to sell now.
I think you have less contingency plans now. So
Correct.
so the ones that if you only have a plan A and B, those both need to be rock solid.
Yep.
Whereas before, people, we could refi, or we could just sell it. It's going up in value anyway. You know what I mean? Like
Right.
when you have less options, the options you do have need to be stronger.
And the comp conversation's less strong these days.
Yeah.
Right. Like I have a listing right now. There's a comp down the road that's sold for exactly what we listed it for.
Yeah.
And not a single person has called and been like, "Oh yeah, you're priced perfectly because that comp sold." Everyone's just like, "Oh, like what's your pricing?" Right? It's like
how much?
No one
how much
cares
will you
about
reduce
comps.
it? Yeah.
So it's the angle should be the title of this episode, because that's
finding
exactly
your
what we need.
angle.
It's finding the angle for the buyer, finding the angle for the seller.
And some of the things that are going to factor into that are the toolkit we've talked about. Your seller financing might come in. Like, are you seeing that as a regular discussion? I guess it always was. Like when was it ever not? But is it becoming more popular that people are asking for vendor financing?
It's almost mandatory.
Like every deal,
every client I've spoken with, they're like, "Yeah, do they do seller financing?"
Right?
So
so more common now than it was before.
We just need that angle, right? Like, hey, the 4.5 cap, 4.75 cap, it will sell.
Yeah,
there's no issue with that building selling. The challenge is what's the angle? For that person to be able to buy it, put minimal down, and have a decent return on investment.
Yeah,
and those are different tools we can use. That's seller financing.
And our sellers capitulating to it.
Yeah,
like they're coming around. I mean, everybody, like I hear it over and over, like the seller expectations are still too high. Like unless you're in one of those situations where you've got to sell, like you have a divorce situation, I guess, you're splitting up assets.
But even those, Andrew, like
they still have unreasonable expectations.
I'm pricing those out quite regularly right now in this market. And you'll sit there and tell the seller, hey, it needs to be X, 2.5, 1.5. And they're like, well, I owe 3.
So they can't,
And they're like, we can't list for 500 less than what we owe. Plus the bank, right? And so like they'd almost rather have the bank take it. Than list for
like
less.
The bank forces a sale.
Like the bank will force a sell. The bank will go sell it. Bank gets paid out, and they'll take the profit after the bank, right? Like that's how those things work.
Well, the issue with that strategy is like you're on the hook for the downfall,
right?
So you're that's not really an option either.
But it's this is conversations I have weekly where I'm sitting down with these people and saying, hey man, this is where your building's going.
So there's naturally, I mean, obviously we knew this was going to happen. There are people with their buildings underwater, and that's probably fairly common. And it's harder to do those kind of deals. Those sellers are going to just sit and wait for a while then.
Right. And the challenge is if those guys are underwater because they don't have an angle.
Or
right? They didn't have an angle.
Which, I mean, we knew that too. Like
but
so many
no
people
even today.
The sophistication wasn't there in general. Like people were just winning anyway. And now the ones that are winning had a level of sophistication to their operation. They thought through their contingencies. They knew their tools. They knew how they would react and respond in different scenarios. And those are the people who are okay. And the people who didn't abuse their leverage.
Yeah. So there's a couple cool things we're doing just to make this more real life. So I'm working on a deal right now. Seller's going to give a 85% first mortgage.
That's awesome.
Right. So seller financing, and it was something that, is almost it's almost a must for the deal because the seller's got so much capital gain. What are you going to do?
Yeah. So this it's actually works for the seller.
Like, no, I need to give you a VTB until I can find something else to buy.
And that's pretty cool.
Have some negatives.
Yeah.
So that's cool. So we're working on that. And so those are conversations everybody should be having right now. And like, for the love of God, stop texting the realtor going, well, the seller give me a VTB. Like,
what do you want them to say?
It's going to have the same answer. You're going to get the same answer every time, right? Like all my listings, everybody texts me, would they do a VTB? It's dependent on the deal structure.
Yeah.
It's dependent on the deal structure.
So put something on paper.
Paper and bring
Make a proposal.
Let me know what your angle is.
Yeah. And then let's talk it out.
Or even if you want to call me and tell me, hey, like, I'm thinking this. Hey, Andrew, I'm thinking if the seller could give me a second mortgage for $500K, I can finance it this way. And then, it would make sense for me to buy at this number.
Yeah.
Great. I'm going to try to make that happen for you. Let me talk with the seller.
Yeah, exactly. Right? Put a proposal. Yeah. And I think your easiest response to that is make me a proposal.
And I always say it depends on the deal structure, because you know what? It really does. If you're going to come in 500K under asking and ask for 100% VTB, of course not. The seller's not going to give you a vendor take back.
Yeah.
Right. But I think it's silly for somebody to say, no, the seller's not going to give you a vendor take back.
Yeah, everything's negotiable.
Right. So
at the end of the day,
that's my vent for the day. But so if you're going to text me and ask about a VTB, let me know why you're asking about the VTB.
What, how much, how much do you need? How long are you going to take it? What interest rate are you offering? And then what purchase price is that going with? Like, think about the variables that sellers want. Like, are these people in an urgent hurry to close? Satisfy their need to close quickly, but offer them a deal that satisfies what you need too.
Yeah. So for me, it's like will the seller give a VTB is the same as, hey, is this still available?
On Facebook. I don't even get mad at that because it's pre-written in on Facebook Marketplace.
Yeah.
Like, some people get infuriated by that. I'm like, I totally get it. Like, they're just tapping.
They're just hitting the button.
It's almost like they want to remember to follow up on it. So they just hit the button and send it. Like, a lot of them never even respond. I say yes.
I get it. But there's no button like that on my website or my phone. So.
There's a button like that with Text and Jake. Will they do a VTB?
Yeah. But it's even the realtors, right? You can, realtors would text me, hey, will they give a VTB? Why? Because my client wants one. Okay, great. No, they're not.
Yeah, make me a proposal. So it comes down to the proposal.
You don't need to beat that one any further.
No, but it's a valid point. I think, like, understanding negotiations, understanding why is it that somebody would want to do a deal with you? Are you making them an offer that makes sense?
Yeah.
Right? Would it make sense? Like, if you were on the other side of it, would you say yes to that?
Yeah.
And the more you can get closer to that, the more likely you are to get a deal done.
And that's the thing. And I'm a team player, right? Like, anybody that's done a deal with me, I'm always like, hey, let's
find a win-win.
Let's find that win-win.
Yeah.
Like, it's there. Every deal's going to have that.
So would you say, because ultimately that's what we were trying to do, finding your angle, and of course, like, what's causing deals to get done? And you said teamwork from the beginning. And you're kind of just saying that again, the win-win. We're all working together.
And that's actually what I meant in that context, Andrew, was teamwork between the realtors, between the buyer and seller.
Yeah.
Like, we're in that market where, there's the odd guys out there that are just like out for blood.
Yeah.
They're like, we'll steal it. Freaking, we'll wait for you to go bankrupt and we'll take it. Like, and sure, there's those guys out there. And I'm not saying that's a bad strategy. If you have the capital, the know-how, and the ability to do that, sure, go pick up the ones that are going under. Right. I'm not, I have no issue with that strategy. I'm just saying the majority of people, that's not what they're doing right now. Everybody's looking for a deal. But I think there's deals out there to be had. It just, how do we structure it? Again, what's that angle?
Yeah, there is an insane deal that's insanely good for the buyer that's also insanely good for the seller. And that's the beautiful thing about
for example,
today.
The first position VTB thing.
Yeah.
Right? So my buyer is coming in with 15% down.
Yeah.
He's going to have a low rate on the VTB.
Yeah, that helps them. Yeah.
But the seller's going to maximize their value because they're okay taking a lower rate on the VTB. So now we're getting like 2 year ago CMHC rate.
Yeah.
Paying max dollar, we can. So if that's not a win-win, I don't know what is. Like, they're maximizing the value. They're getting the best return they could possibly get. Like, it just feels good. Right. And so that's the stuff that's
working on win-wins. I like that.
That's what I'm working on right now. There's another deal we're doing where the vendors, and this has been a long journey, almost 4 months now, 5 months. We've been working on this. 4 months we've been working on this. But the vendors are going to give equity into the deal.
Oh yeah, that's a great solution.
Instead of a vendor take back, they're going to
take equity units.
They're going to basically give some of the profits as equity to the seller and basically invest in a JV or excuse me, an LPGP.
Yeah.
And so that's what's beneficial there is now as an investor in a GPLP, we don't need to debt service for that cash. They're just investing.
Yeah, right? They're not on the hook for the financing. They're not guaranteeing any mortgages. They're in the deal.
Yeah, they're going to personally guarantee the return of X and the return of the initial investment, right, the principal. But
the seller is.
No, the buyer.
Or the buyer is, sorry, yeah.
But it's so that's another really interesting angle, and that's not something everybody wants to do. But in this particular
it's just creative deal making.
Yeah, in this particular case, we looked at 5 different angles and we went, hey, this is probably the only way it's going to get done.
Yeah.
And so we're the one deal is to close the transaction. Then we have a side agreement saying that they're investing in the LP now.
Cool.
Right? They're now an investor in their own building.
All right.
So that's a cool angle. Like that works.
For sure.
And then outside of that, Andrew, like there's, lots of second position vendor takebacks happening.
And usually going in behind non-institutional financing, right? Privates, because the institutions don't really like that.
No, you got to debt service it, right? So if you're debt servicing at a 1.2,
it won't work.
And then now all of a sudden you got to account for the other $1 million of second.
Yeah, they'll just claw back your first mortgage because the bank's going to look at the total package and how much it costs, and they're not going to like it. So
right. So there's stuff like registering vendor takebacks on different properties We did a deal 2.5 years ago now.
Yeah.
Where the seller was dead set on his price. I was repping the seller. Seller was dead set on his price.
Yeah.
Won't budge a penny.
Yeah.
And we had 5 guys come through and look at the building, make offers. Seller goes, no, this is my price. Take it or leave it.
Yeah.
And then I found a group that came in. They said, okay, we'll pay you your price.
Yeah.
They said, but we're not getting the loan to value because of your price we need. So we need a vendor take back.
Yeah.
But
you got to register.
You got to register it on a different property. And then again, it was a win-win-win because those guys had a great portfolio. We were able to register it on a property in like Toronto.
Yeah.
Same equity as our asset.
Mm-hmm.
Same style as our asset. And my guy was like, I'm totally comfortable with that. Give me second position on that. I don't see any difference between that and registering second on my building.
Yeah.
That actually might be more safe because his building was a value add.
Yeah.
Right?
Fair enough.
And that was stabilized.
Yeah. That makes sense.
And so
creative deal making comes down to it.
Again, so creative deal making, the angle.
Yeah.
And so that's what I'm seeing in the market right now, to summarize.
Yeah. No, that's good. And we could go on. I'd like to put a bow on this one just so we don't give too many concepts.
Yeah.
Because it's tough. We want to keep this short format. But yeah, definitely some interesting strategies. And it's good to have that insight of what's happening and how deals are getting done. Hopefully people watching are going to get something out of that to, how you can negotiate a little different on your next deal, how you can try and put something together that makes sense for the seller and gets you a great opportunity. Mm-hmm. Or if you're a seller, how you can exit your position and, optimize what it is that you want to get out of it, how you can motivate buyers to want your asset.
Exactly.
So very cool. Okay, so I'm going to reiterate, Jake has a link under this video, and if you want to connect with him and potentially have him help you out with your real estate endeavors, you can enter your info there, and somebody on your team will get in touch, correct?
Yeah, that's it. And just as a reminder, it's not only for buyers, it's also for sellers. If somebody's is watching this and they're thinking about selling and, they want to hear more, or they want to see what the value is of their building.
Yeah.
I'm more than happy to personally look at the value, run it through my performa, come to you, give you the angle, let you know how I think we can get it done. So if you're a seller or you're considering selling, also the link is down there for you guys.
For sure. Yeah. All right, guys. Thanks for tuning in this long. If you made it this far, please make sure you hit all those buttons, leave us a comment, let us know what you think. If you have any questions, and then of course, share this with somebody you think it could help.
Right on.
We'll see you next week.